What's up guys, thank you for tuning in this video I'll be showing you guys my $175,000 worth of portfolio. What has happened today, why am I down almost $3,000 for the day, and what's going on with the options contracts that I have. So if you're interested into this, sit back, relax, and I'll take you for this interesting journey to say the least. This is AK from Passive Earnings, and today I wanted to show you guys my portfolio that is down almost $3,000 thanks to QQQ falling almost 2.5% during the day and recovering a little bit after hours, but over $12 per share, more than $12 per share drop in one day. And I saw over $1,100 drop in my portfolio just from QQQ. I'm big on QQQ and SPY. These are my top two ETFs or holdings, you can call them. And even SPY was down almost 2% for the day, and both of them are up after hours. But this might well be the correction that I talked about in my last video that we were looking for, because everything was at its all-time high, and that includes SPY, that includes QQQ, and even the passive stocks that are Procter and Gamble, and even ETFs like SCHD were at their all-time high just a few days back. So if we go to a month high, it was almost touching $29. Now it's back to $28.19. And if you look at my other options that I've played here, so my options contract for QQQ was a covered call that I took out of the money for $530, and this is expiring tomorrow, very soon. I collected only $22 here, but I do this every single month, so I collect or make some $22 to $30 every single month that I reinvest back in buying QQQ. So that's the strategy that I go with. I don't want to lose my shares, but at the same time I want my shares to be working and generating more revenue for me every single month. So that's the strategy that I do. So hopefully after tomorrow, what I'll be doing is I'll be coming here and I'll be selling a call for next 30 days or 30 days out, and that'll be with a delta less than 0.1. So let's see what we will be selling this at. So somewhere around here is how I think. Yeah, this should do it, or maybe here, delta of 0.02. This is too conservative, I think. So maybe around 535 or 540 is where I'll be eyeing, and then whatever money that I'll generate, $25 or $38, I'll buy back more of QQQ, and that is how I'm able to generate 104 shares for QQQ. Of course, most of it is out of my pocket. 100 shares I bought out of my pocket, and then 4.85 shares I have been able to collect by selling covered calls on QQQ. I've been using Seeking Alpha for my market research, and it's been a game changer. It is packed with detailed analysis and real-time updates that help me make better investment decisions. If you are into the stock market and want to dive deeper, I recommend checking it out. I have included a link in the description if you want to explore it yourself. You'll get a $25 off on your yearly plan, as well as 7 days free trial for premium version. Then going back to the other options that are in play, we have SOXL. So I have a covered call for SOXL, but this time I have rolled it out one more week. So you see here that it is expiring on November 8th. I am willing to sell my 100 shares of SOXL that I bought for $29 and some cents to sell at $30 per share, and I've been generating consistent 50 to $100 per month from just these 100 shares that I've been holding. So that was the covered call that I've sold. Then I also have another seven contracts, so a lot of cash tied up here for 11/8, meaning same date, which is November 8th, and I've got a credit of $1.46 is the current price. I've got a credit of $1.45. I'm down $7 for this, but I'm okay with it. I don't even mind getting shares of SOXL at $28 because this is not a long-term investment that I'm really making. So what I'll do is if I grab 700 shares of SOXL at $28, I'll be selling covered calls for all those 700 shares. So I'll be selling all my 700 shares at maybe a better price. If not better price, then at least the same price that I've sold or I have bought these 700 shares at, which is $28. So say for example, if I had bought the shares at the current price or $31 for example, right, and then the price of the stock is now less, I would still be able to sell a covered call at $31, and per contract I'll be making $171. So per share I'll be making $1.71. So times that, $1.71 times 700, if that were to happen, I'll be making $1,200 for this for just 1 week or 8 days, if this get assigned and it plays out as expected. So that's why I'm willing to buy 700 shares with this $28 price. So I have 700 shares. And I will be able to sell covered calls with that. So that's the third option contract that I have. So these are the three options contract. One is expiring tomorrow, and then the other two I will roll them out, or I will see if I want these 700 shares to get exercised so I can roll the options again, or make more money selling covered call. So that's about it. And then I just wanted to update you guys on my SPY expedition, the road to 100 shares of SPY. I am investing $110 every single day here. But at the same time, what I do with this is every time I sell a covered call or cash secured put. So in this case, I sold cash secured put on 700 shares for SOXL, or rolled the call, and I was able to make $279 and some cents. So I bought SPY with that money that I collected from selling cash secured put. So all of these things go right back buying SPY and S and QQQ, and that is what the plan is. So I was able to get almost half a share of SPY today just by selling cash secured put on SOXL 700 shares for that. And then again, I'm looking to buy the dip. So every time the price goes below the current price, I try to invest on a red day. My average cost, if you see here, is $557.37 for 73.3 shares. And the target here is to get to 100 shares. Earlier, I was targeting to get to 100 shares by the end of the year, but now I'm thinking more the mid of the next year. If everything's go as planned, I'll be able to get to 100 shares by then, which I'm okay with, because I don't really want to buy a lot of shares at the higher price than my cost basis, which eventually will happen, but not right now, not until I get 200 shares. And again, same thing I'll be doing again with SPY, what I'm doing with QQQ, I'll be selling a covered call. Once I get to 100 shares, I'll be selling a covered call again 30 days out in this case as well, and with very low delta, so that my shares do not get called away. So say for example, somewhere around here, with zero point zero 0.06 delta, so less than zero point 0.1 delta, and I'll be able to generate $60 or some at that time as well. So this will be the way of me making passive income with my investments. So not only the growth that I'll see with these ETF prices, but also I'll be able to capture the dividends plus the options premium. So all these three combined hopefully will result in a snowball effect and will get me the most out of my investments. So that's about it. Thank you guys for watching. I hope you guys like this video and this updated video. If you haven't already subscribed to my channel, please do so, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.